Now we're on bank watch. As bank earnings continue to pour out this week, ratings agencies are taking a closer look at the financials. And our next guest has 7 of these larger banks on a ratings watch list. Now, joining us now is Fitch Ratings Managing Director Christopher Wolfe. Chris, thanks so much for joining us.
Thank you.
Now, I know one earnings report is not going to change your view one way or another on ratings, but are they supportive, what you've seen from these banks, supportive of a downgrade or not?
Again, I think a lot of our review is focused more on the longer-term implications that these banks, particularly the global trading banks, face in terms of challenges from financial markets and the global economy,
right,
as well as changes in regulation, both coming from Dodd-Frank in the U.S. and as well as Basel III. So, taken together, we think that they potentially end up having slightly or comparatively lower ratings than some of the other more traditional commercial banks.
Right. Goldman Sachs, Morgan Stanley, Bank of America are those U.S. banks that you've got on ratings watch
Correct.
right now. What was interesting about Goldman is that they were so dependent on their on the trading operations.
Right.
It really shows that their earnings are quite volatile. That's a negative though for that bank, right?
The volatility, and that's
Yes.
the issue that when we look at, you look at the volatility, plus when you layer in the fact that most of the trading business is wholesale funded,
right,
which is very confidence sensitive. Those are issues that put I think greater stress on those banks relative to others.
Well, what more information are you looking for before you make a move on the ratings of these banks?
We're looking at how they intend to fund the business kind of on a go-forward basis, and their ability to withstand even greater stresses than what we're seeing today. The ability to operate with higher capital levels,
okay,
and make that work. So having higher capital levels is one thing, but if you can't generate a good return on that capital, then you're going to have an issue somewhere down the road. So looking at how they can manage those various risks and still generate good returns across the board.
What will tell you that in the next few weeks?
It's really a function of how they're setting up their business to withstand some of the pressures that we see building, both from a global economic basis as well as what's happening in financial markets.
You mean, so if they're going to make any moves to perhaps shrink their base, or okay,
change risk appetite, things that they can do to insulate themselves further from any fallout from what we see
right,
happening.
to make sure that they've got enough capital, essentially.
Right.
When do you think that you might come out with a decision eventually?
We hope to resolve these in fairly short order, but there isn't a specific date on the calendar. So I don't
right,
think I think as quickly as we can, we would intend to resolve these.
So weeks or months are we talking about?
Somewhere in between, I would think.
Okay. All right, Chris. Thank you very much. I appreciate it. Chris Wolfe of Fitch Ratings, as we mentioned, has these banks on ratings watch negative.